Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market rundown. We'll do commodities in a separate video this weekend. So the bulls had a pretty good day. I would call it a good day on Friday just because they held up after such a strong day on Thursday. To not see any real consolidation still shows the bulls have full control at this point. We do have a little double top at the high of the last 2 days, 298.83. Failed to break that level by less than 10 cents. We had a reaction to Powell speaking in the afternoon, and you can tell by the range of the trading day that it wasn't a significant reaction either way. So if we see a bear break on Monday of 297.42, the low of Friday, then we're going to look for a pullback and a higher low to form, and anything above 289.27 is a daily higher low for SPY. That's my new line in the sand, where I'm going to say that if that level holds, bulls have control because they have the daily trend in their favor. Again, as I pointed out multiple times on the weekly, longer-term timeframes, we do have to be cautious of both the financial sector and SPY and some of these other names, where if we fail to break recent highs from back in July, and if we were to roll over and break the August lows, that would be a very bearish technical event. And if that doesn't happen, then the bulls keep the weekly uptrend and they keep full control. So that's why the FOMC is so important in my opinion, because if we are going to see a right shoulder form, it's going to have to require the market to see some significant weakness in reaction to the FOMC. IWM. So the daily trend changed. We didn't get a whole lot of follow through from it at this point. And the high of the initial bounce attempt, 152.63, has not broken. So pulling back, closing near the low of the day. And the line in the sand here is 146. Bulls have to hold 146 and break 152.63 for a clear bull break on this daily time frame. Or I should say a clear continuation move, because we already did get the clear bull break on Thursday. But some continuation is needed for the bulls to get confident. As the weekly time frame, we're just looking for a lower high on the weekly chart to form compared to 159.23. So IWM remains one of the weakest things we look at, sectors and markets. And looking at QQQ, it's holding up similar to SPY. Daily inside bar, unable to break the high of Thursday, but not much pullback. If we do break 191.17 on Monday, we're going to look for a daily higher low to form. Anything above 185.03 is that daily higher low. Financial sector, also a daily inside bar. If it breaks bearish, we're looking for a higher low compared to 26.41. Bulls ideally on all of these names want to backtest and hold the daily exponential support. If we get a bull break over 27.56, we're looking at the recent high. And again, the weekly time frame, we just have to be cautious of the potential that we could still see this develop bearishly. And if you remember months ago, that was the scenario that I laid out that I would be potentially bearish. And actually it wasn't months ago, it was weeks ago. But if we were to roll over, that would make me notably bearish, because when's the last time we've seen SPY give us weekly lower highs and lower lows? And the answer is not since the December dump. XLV. Saw a little bit of continuation, 91.69, 92.17, have to break the top of the initial bounce attempt. But bulls slow and steady, keeping a little bit of follow through. Anything above 89.71 is a daily higher low. And the weekly time frame for XLV also could be a little bit of a head and shoulders pattern, but it's not as clear. What I'm watching for the head and shoulders on is pretty much just the financial sector and SPY. There are other sectors where you could draw it on, but that is where it is most important for me. Biotech sector still in a daily downtrend. Anything under 81.52, just a lower high. We're rejecting from daily exponential resistance time and time again, closing near the low of the day. And then we're looking down at 77.87 as the only support level nearby. Worth keeping an eye on the biotech sector. It could be shaping up to a potential falling wedge. Something along these lines to be keeping an eye on. So as this range tightens, if we do see continued sideways and a slight downtrend of trading, this is something that I would be watching into the next couple of weeks. But as long as we're in a daily downtrend of lower highs and lower lows, the bears certainly have their control. And looking at the VIX here, dropping down to the lowest price makes sense. SPY is at the highest price since the August dump, and the VIX is at the lowest price since the August dump. So we're now looking back down at the 1470 range, where the bulls struggled to get above a couple times. But at this point, I'm just watching daily trends. And the daily trend is a downtrend with lower highs and lower lows continuing. And any kind of bull move that we see, anything under 2120 is just a lower high. So we'll be watching the VIX as we head into the FOMC as well. FOMC is going to be a week from this Wednesday, not this coming week, but a week from this Wednesday. So there's still plenty of time for trading, 7 trading days, where we could see pretty much where we are set heading into the FOMC is going to be important. Because if we are $3 from all-time highs, or if we are $8 from all-time highs on the S&P, or I should say on SPY, that is a big difference. So one day at a time, as always, the bulls have control as far as I'm concerned. To even consider the weekly head and shoulders scenario, we have to lose the daily uptrend. And that's not going to happen anytime soon, as the bulls have so much space to work with. We still are going to anticipate, even if we do pull back a good bit. I mean, let's just looking at the S&P 500, we could see a pullback of 2.5% and still be holding that daily high or low. So thanks for tuning in. Hope you have a good weekend. We'll end it here with some Iceland. Again, check out those commodity videos because there is a lot of opportunity in the leveraged ETFs of commodities. And really just, it's been taking my attention away from the cryptocurrency space where the volatility in these commodities and magnified by the leveraged ETFs. I mean, I'm not looking to trade anything else really aside from the MJ sector and the commodities recently. And as long as the commodities keep up that volatility, that will remain the case. Got to jump where there is opportunity and volatility and volume and stay away from things that are in less clear tightening ranges. We want breaks of tightening ranges, not playing within them. We'll play within them if that's all we have, but when there's better opportunities elsewhere, might as well go to them. So commodities, check them out. Get familiar with them. Broaden your trading horizon.